Death is going to happen. I'm willing to bet you've known someone who's died. Was it someone in your family? Was it a friend? Did you have to carry the financial burden? Did they have life insurance? I'm sure you've heard of why you should have life insurance, but I'm sure you probably haven't discovered what kind of life insurance to buy. Today I'm going to talk to you about whole and term life insurance. I'm going to tell you what the living benefits are of both. I'm going to teach you how to create a policy. And the bottom line is you're going to discover why whole life insurance is the insurance that you should buy as soon as possible. Insurance in general pays out in the event of death. What forms are there? Let's go over the two most popular. Term life insurance is set up for a specified amount of time. Once the policy's time expires, so do the benefits. You can sort of renew this policy at your attained age, which is much higher in premium. A whole life policy is also known as a permanent life insurance policy. It has a level premium with an investment additive. There is no time limit on whole life insurance, and it pays out at death, just like term. It accrues cash value from which you can borrow from, withdraw from, or even let accumulate. Now that you have an understanding of the two most common life insurance policies, let's go over what the best choice is for you. We're going to go over the financial living benefits of whole and term life insurance. Whole life insurance includes something called a dividend, which is untaxed money that's returned by the insurance company once they've viewed the efficiency of your policy at the end of every year. It's sort of like your tax return. The second thing is riders, which are additional clauses added to your policy. The two most common are child riders and disability riders. Child riders make additional insureds on your policy without creating their own special policy. Disability riders are additives for if you get disabled during the time of your policy, the insurance company will pick up the premium for you. So if you can't work, the insurance company will take care of you. It also has a cash value, which is considered interest. You can use this cash value to pay your premiums, make paid-up additions, so additives to your death benefits, and it's also exempt from lawsuits. So if you're sued, it's not considered any kind of money that you technically have at the moment of the lawsuit. You can take out loans, which can either be from the death benefit or from the cash value, and it doesn't have to be paid back. But I caution you, if you don't pay it back, it is taken out from the death benefit that your beneficiary would potentially get. Whole life insurance also has level premiums. So no matter what happens while you have this policy, as far as your health is concerned, your premium will never change. Your policy is also in force until you're 100 years old, basically your entire life. Now let's go over some term life living benefits. It's cheaper than whole life insurance, and it's good for people during the peak times of their life, when you have things like a mortgage or educational loans that you're paying back or excessive car loans. And it's a set policy that's paid for a particular amount of time. So you don't have to bank on this money being pulled from your paycheck for the rest of your life. Now, you've heard the living benefits of whole life and of term life, and I think you can see that whole life has a lot more benefits and they outweigh term life insurance. But I bet you're thinking, wait a minute, isn't whole life insurance super expensive? Let's go over the cost of whole life insurance, and I'm going to tell you why it ends up being a better policy for you. When you buy at a younger age, whole life insurance is a little less expensive. It's because you're less likely to die. Actuaries, the people who form a death table, determine that when you're younger, you have a less likelihood of dying than when you're older, obviously. And you're considered more healthy. So the older you get, the less healthy you are. But how much do you buy? I'm going to use an acronym that I borrowed from when I worked as a State Farm insurance agent. It's called LIFE. You can also go to the State Farm website and use this acronym to determine how much insurance you need to buy for yourself. The L stands for loans. Total up all the loans that you have. Car loans, house loans, any loans that you got. The I stands for income. Your family's used to you bringing in some kind of money every year. What is your income, and how much do you think it would take for your family to get back on their feet? 1 year, 2 years? The S stands for funerals. So it's the cost that you're going to pay out when you die. And according to the Money Book of Personal Finance, funerals cost in the neighborhood of $8,000, which will increase with inflation over time. Now, in with funerals, don't forget about any medical bills. You could potentially have some medical bills that need to be included into your funeral costs for nursing homes, etc. The E stands for everything else in education. How much money do you want to leave behind for your kids for their education, or anything else that we didn't cover in the first three? Now subtract all your assets. So if you have a house, you can go ahead and subtract that. What's the cost, the worth of your house? Let's subtract that as an asset. Now you've got a number, and that number is how much your policy should be for. So say it's $125,000. You should build a policy. You should have a policy that covers a death benefit of $125,000. Whole life insurance never times out. The price is locked now until you're 100. Now let's go over what we talked about. We talked about the two most common types of life insurance. We talked about the living benefits of both. We talked about cost effectiveness. Don't you see that whole life insurance is better for you? So why wait? You're going to die. You have no choice. Go ahead and get yourself a life insurance policy today, and get yourself a whole life policy so you never have to worry about it anymore.